Hi, everyone. This is Aaron Larson, executive editor of Power Magazine, and you're listening to the Power Podcast. On today's episode, I'm joined by Cassidy DeLine. Cassidy is the founder and CEO of Linea Energy. So I really appreciate having you on the program today. Please tell a little bit about yourself and about Linea Energy.
Absolutely. Yeah. Thanks for having me here today. I'm Cassidy DeLine. I'm the founder and CEO of Linea. I've been developing renewable power plants for the last 16 plus years, and I love what I do. Linea is a renewable IPP, independent power producer. We develop, own, and operate wind, solar, and battery storage, and are evaluating some other technologies to add to that mix.
The first question I have for you is, what was the moment or the insight that made you say, I need to start my own company?
Yeah, it's a question I've asked a lot, and it's a good question. You know, the drive for me was not to be a CEO. It was not to, necessarily to be a founder. It was an intense desire to really get it right. I've had the opportunity to work at some really great developers prior to Linea, but, what I've seen in this space is there's still a lot of low-hanging fruit in terms of being really thoughtful about the development process, being really analytical about the development process, and incorporating that from a process perspective, from a technology perspective, and from a people perspective. So the desire to build that in the most thoughtful and rigorous way was really what was the impetus for Linea.
And when I was doing some research on the company, I was on your website and I saw the tagline, Renewables Reenvisioned. And so, what specifically about the traditional development model did you think was broken, or what was it that you wanted to do differently?
I don't think the traditional development model is broken. I think that there is room for improvement. And, development it is what I have spent my career on, but it is an incredibly hard and difficult process. And all through that process, there are a million and one things that can go wrong. And there are a series of risk adjusted decisions that need to be made. They can be very complex and very complicated and also have large financial ramifications. And those decisions are made with imperfect information. And so, one of the things we've really tried to do at Linea is to think about those decision points and how can we bring better information forward. In development, typically, you wouldn't have really good granular information on a site in terms of where exactly wetlands are, what exactly the topo is, until you actually go do a field study. You sign the lease, you mobilize land, and you get someone out to site to do that field study. How can we get that information sooner? How can we get that information before we even sign the land? Before we even deploy land agents to go talk to that landowner. So, one of the things we've done is we've built a number of simulations that take data from various sources so that we can have that information at our fingertips. And, we've done similar things when it comes to transmission and understanding the grid, our financial modeling. So what we're really trying to do is we're trying to improve the quality of information that we have, that our developers have earlier in the process, with the overall goal of improving the decision-making process, acknowledging that development is, it's really a series of difficult risk-adjusted decisions.
What size projects are we talking about? Like, where's your sweet spot in the development pipeline?
We build larger projects, so, anything from 80 megawatts AC up to, we're working on a few projects that are a gigawatt AC.
Pretty good size. You're not doing it for utilities, though. You're more of the independent power side of it, right?
Yeah, so we will own those, and then in some cases we sell the power to a utility. For instance, we have a project in Michigan that is public and under construction. And there we're selling the power to consumers in Michigan. In other cases, we sell to retailers or corporate offtake.
And when you're doing the development, how do you balance building, a clean energy project and investing in the communities where you're operating?
We take community engagement very, very seriously. And, that is something that you can't address with technology. That is something that needs to be addressed with people, where we have larger projects. We set up offices so that people can come in, and they can talk to a human about the project. We invest in local nonprofits and communities, and we build relationships with our landowners. I mean, ultimately, we are the long-term owner operator, so we're going to be in these communities for 40 years, and we take our partnership with them very seriously.
And what are your thoughts on what developers need to do maybe differently to truly accelerate the energy transition?
There is a lot of talk around acceleration right now, and it's being driven more by data centers' need for power as quickly as they can get it than it is truly accelerating the energy transition. But that's a positive thing because everyone is trying to figure out how we can build and how we can build faster. There was a lot of momentum behind truly behind the meter structures for data centers. And I think that has to some extent reversed, and the grid exists for a reason, and it's beneficial both for load, and for generation to be connected to the grid. That said, I think as an industry, and I think the industry has broadened to include, the hyperscalers, to include the load, we can continue to push some of the structures we're seeing, like an SPP, that allow for faster interconnection processes. And, it's exciting to see that evolution.
And you built a very large pipeline of 5 gigawatts in fewer than 2 years. What made that possible? Like, that is a really rapid pace for a kind of a startup company. So, did you hit any walls or anything that you weren't expecting along the way?
We were actually well above 7 gigawatts at this point. We most certainly hit walls and unexpected things. That's the nature of development. But I think that we have been able to move quickly. I think because we were really thoughtful about the process. We invested pretty heavily in our technology. We invested pretty heavily in our process before we had any projects, recognizing that, once you have projects, it's too late to do that work. And I think that really laid the groundwork for us to be able to hit the ground at, a speed and a pace that I, frankly, I think is a bit unrivaled given when we started and the size of our team. Linea both greenfield develops and acquires projects. And so, of that, about two gigawatts of those projects were acquired in kind of mid-stage development. And, Linea has been able to come in and of, I think, the 7 projects we acquired, 5 are in construction or near construction. So, we've also been able to come in and convert those from stacks of paper to steel in the ground relatively quickly.
And from what I understand, you sometimes will develop projects even without power purchase agreements in place, and then you contract them at a later date after the project is in a later stage of development or even in use, I would guess. So that's quite different than most companies and most developers. How do you manage the merchant risk, and how do you work with capital partners? How do they feel about this strategy or this process?
I'll say I think more in the industry have started to take our approach, and one of the things that has been a factors there are the tariffs and kind of the uncertainty around capex, and where 5 years ago folks wanted to sign PPAs for projects because that showed that a project was de-risked. That offtake can now be a runway risk if you don't have certainty around your capex with just the volatility and costs that we've seen, particularly in the last year. So for us, it's really important that we think about, making sure that the revenue side and the offtake side aligns and is de-risked as close to when we are able to lock down the cost side. And I think more folks in the industry have gone towards that approach because folks have gotten in trouble where they've signed PPAs and costs spiked drastically. We're able to do that because we also we do very rigorous bottoms up fundamental analysis on the markets that we're in that really gives us a view of what that electron is worth. And so we are comfortable kind of underwriting to that standard. And then obviously when we sign off take hope to do better than that.
You mentioned the fact that you do both greenfield development and sometimes acquire projects that are already developed. So, how do you decide when you want to build from scratch or when you want to buy?
Yeah, it's a good question. It's really timing dependent and location dependent. So, we're not the developer that just kind of scattershot develops. We're not developing for scale necessarily. We have a very specific view of what technology we want in what location on what time frame. And so, our developers and our M&A team has a hunting license to go find those very specific things. And if we can find that via M&A, that's great. If we can't, we greenfield develop it.
And in looking at your bio, I know you've been involved in several industry firsts over your career. I noticed the first non-recurrence financing of a project with a non-rated CCA offtake, the first bond financing of solar in Canada, and the first tax equity investments from major corporate investors such as Walmart. So, what have those firsts kind of taught you, and what new innovations do you see for capital markets going forward?
I think that the industry, particularly on the capital side, feels like it's at a place that, the capital is a bit more commoditized. The industry has matured in a way that capital providers know what to expect, and there's fairly deep liquidity, which is great. Where we have not matured is public markets, and the industry has kind of continued to struggle in public markets and really even getting to public markets with scale, with continued scale. It's at some point that has to happen. Public markets are obviously an important source of liquidity and equity. And so, I think what we're likely to see over the next coming years is more consolidation in this space, and that may lead to more tapping of public markets.
And it seems like we're writing about data centers all the time these days. That has become the hot topic, and everybody's talking about them and talking about the demand that they're bringing to the market. So, has that changed any of the conversations that you're having in your offices? For instance, are you working with any data center developers to provide them with power?
Yeah, absolutely. We're doing quite a bit there. We're doing some bespoke development, for data center developers where they already have a position and they already have development. We are also developing the data center itself in certain locations where we're developing the whole package of, the energy campus plus the data center. There's quite a bit to think about there. And one of the things to think about is how do these data centers integrate into and affect the grid. And so that's a place where Linea has done a lot of really interesting work thinking about what the implications of the data centers on the grid are. The data center inference load fluctuates very quickly. And, if you have a really large data center campus, that load can be turning on and off effectively on a microsecond basis. And that's not how what the grid is used to, and that's not what the grid was necessarily built for. And so Linea has worked on some very specific solutions with batteries and inverters that help solve those problems because, if you work in the power space, the end to drive is the lights can't go off. The lights have to stay on. And if some of those problems aren't addressed, even if there is the power, just the instability, has the potential to make the lights go off. And so that's a problem that we have been working on and have a solution for.
Do you have to structure your power purchase agreements differently when you're working with a data center developer, for example, as opposed to a traditional, maybe a utility that you're contracting with, or are they pretty similar? You're still just providing power to some off-taker?
There are differences buyer to buyer where you're thinking about kind of more bespoke solutions that are either behind the meter or a bridge. There's certainly some structural considerations there. But I would say largely offtake agreements have also, to some extent, consolidated around certain norms, which is helpful.
And we hear a lot about how the interconnection queue is kind of a bottleneck for getting renewables built. How do you approach the interconnection queue when it comes to building your projects?
The queues are certainly a bottleneck, and we as an independent company can't independently solve that. I think there's some progress that is promising across the various RTOs, both in terms of just working through their backlog as well as technology that they're rolling out. Sugar in the case of MISO, and I think PJM has their own modeling software that should speed things up. What we do is we make sure we do our own very robust transmission modeling, and this is another place where we, have invested in technology. But so what we do is we make sure that we're not contributing to the problem by flooding the queue with low quality positions that are not going to advance. We make sure that, when we submit to the queue, that we have done our homework, that we have a high degree of confidence that the project can and will advance.
Mhm. Does that tend to get you kind of a priority within the queue when they know they can count on you to come through in the end?
It doesn't necessarily. The queues are very highly regulated, and they treat everyone more or less the same.
Mm. And I know you operate in multiple regions. I believe you're in ERCOT, you're in SPP and MISO, maybe others. Is it difficult, or do you have your experts that are familiar with each of the different markets so it works out okay?
It is somewhat difficult. Each market is truly distinct. There's similarities, but they operate differently. They have different price formation characteristics. They have different regulatory considerations. So one thing that is very core to Linea is we are diversified. We're diversified from a technology standpoint, and we're very diversified from a geographic standpoint. That just requires us to have broader coverage and to make sure that we do really understand those dynamics in each location.
In the opening, you mentioned that you do work in solar, wind, and storage, and you're considering other options. But where specifically do you see storage fitting into the whole process, and how does it affect reliability?
Storage is an incredibly promising technology, and it's well deployed in California and Texas. I think the head of ERCOT in Texas called storage one of the most exciting advancements on the grid since combined cycle. Storage can and will play a very important role, both as a capacity resource and a balancing resource. There's some really great case studies looking at Texas and the savings that batteries have brought to ratepayers by basically smoothing out the peak. So we continue to see storage play a role in many markets, particularly with capacity resources forecasted and coming to fruition in MISO, PJM, and elsewhere.
What's the biggest misconception that people outside of the industry have about what it takes to get a utility scale renewable project from concept to commercial operation?
I think the biggest misconception is really, each project is its own company. So if you think about each project as its own company, it has its own problems to manage, it has its own P&L to manage, and just the level of complexity I think is not well understood. I think you're seeing that with some of the data center developers and hyperscalers who are used to developing things in software. And, it's hard to build things in the physical world. There's a lot of things that can come up and that will come up. And it's the job of the developer to overcome those.
And I don't know if you're going to want to talk about this or not, but as I was going through your website, I saw that you were looking to hire a SMR technology and deployment intern, which for listeners, SMR is small modular reactor. So is nuclear something that you're looking to get into possibly?
We're evaluating. The queues are long. And so, if we start a greenfield project today, that is probably not built and online until, early 2030s, mid 2030s. And so kind of thinking forward to what the world is going to look like then, one of the things that we're evaluating is the small modular reactor technology and what might make sense there. I think that the economics aren't there today, the technology isn't there today, but this is really kind of thinking about where the puck may move and skating to that puck.
And do you think that there's money out there that will funnel into this SMR technology eventually?
I think the jury's out. There's a lot of political support, really from both parties, which is rare, and so that's positive generally. Right now the technology is very expensive, and energy is a commodity, so competitiveness is important. So, for private capital to flow in, there are going to have to be gains in terms of the cost competitiveness.
Mhm. Well, Cassidy, this has been really interesting. I've enjoyed talking with you. Is there anything that I haven't touched on or asked about that you think would be important to mention before we wrap up?
No, it's been great to speak with you as well. Appreciate it.
All right. Again, for listeners, I've been speaking with Cassidy DeLine. She's the founder and CEO of Linea Energy. So thank you again for coming on the program.
Thank you, Aaron.